Hi, nice to see you all. Hi, how are you all doing today? Lovely to see so many faces. New faces, familiar faces. Welcome, everybody. We had about 150 people amazingly sign up to this event today. So we are going to give people a few more minutes to arrive. Do let us know in the chat where you are coming in from today. We always have a very global audience. I'm in West Africa today. I think Ella's in London. Where are you, Claire? You're in the US somewhere.
I'm actually in London today.
Are you back in London?
Probably like across the street from Ella.
Well, welcome everybody. All right, I'm going to do a bit of an introduction just so that you know who I am, what we are doing here, what's the aim of today's session. But we're going to use the majority of the time we have together to get into the good stuff today and hearing all of these brilliant fundraising stories. But for those of you that haven't met me yet, my name is Esme. I'm the founder of Consider Capital. We are very small, so I'm one who has been emailing you. I am the one who's been interacting with you in some way, putting together the newsletter, however you found us. It's very nice to meet you all. We've also got Sam here today. Give us a wave, Sam, who is working diligently behind the scenes to make sure that Zoom works appropriately, works for us, not against us. She's going to be in the chat, making sure that I don't miss any really, really good questions. She is also excellent at adding in any links that people mention, any resources. She will find them and put them in the chat, so keep an eye on that. Today, our aim really here is to celebrate some amazing fundraising stories from 3 women who are building purpose-driven businesses. These stories are not rare, but sometimes difficult to access and understand exactly how they got there. So we're going to be really practical. Today, we're going to dig into that nitty-gritty. These stories are all different. There's not going to be the same story as you. You can't just take their fundraising journey and make it your own. Oh, can we make sure that we're on mute? Thank you. But you can understand the themes here, the steps they've taken to get to where they are, and learn from their experiences and see which parts are relevant for you, how they got to where they are, how they decided on their mission and their vision, and how they were going to protect it as they went out to raise funding, and what steps they took to get there. That is the aim of today. We're going to have it's going to be mostly Q&A for those of you that submitted questions. I've gathered them all, and I will ask the first few questions, and then we'll just open it up to everybody else. You can put questions in the chat, or you can raise your virtual hand and we will make a queue and you can ask directly. A little bit about Consider Capital, and before we get started, we help entrepreneurs who are purpose-led raise funding. So we help you figure out what that journey could look like for you. We help you get the resources that you need, the access that you need, and hopefully build your confidence as you go on this journey. We do this in 2 very simple ways. We have our alternative funding school, which actually all 3 of our founders today went through at some point, and it kicks off in a few weeks. And we have our fundraising masterclass. And we will share some links at the end if anyone is interested in those things. But let's get on with today and digging into these amazing stories. I'm going to start with Claire, go around the speakers for some introductions. So for those of you that haven't come across Claire's story yet, her business that she built with her co-founders is truly what I would call a wonky shaped business in the best possible way. They have a really interesting governance model that I think Claire will dig into a bit. But because of this governance model, it meant that they had to pursue a journey that lived outside venture capital. And perhaps, Claire, you want to talk a little bit about your journey so far and why you chose your particular funding options.
Sure. Hi, I'm really happy to be here with you all. We'll give you a little bit of a introduction about me and my company Diagonal. We founded Diagonal in 2000, well, technically 2019. And we build tools for city planners, bringing data together to make make insights actionable. And I say technically we started in 2019 because that is when my co-founder Andrew incorporated Diagonal, but really it was in Skunkworks then, and I'll talk a little bit about the different phases of funding that we've gone through. But one thing that has been important to our fundraising is the type of work that we want to work on and the impact and purpose that we have behind our organization. We are a bunch of technologists who believe very strongly in the right to the city, to making cities better places, and we want to use the skills that we have towards that purpose. Now, the ways that we know how to do that, we also know that it's not a unicorn-shaped consumer market. That if we were to go after venture capital funding, we don't have the market size to kind of back up our the investment and returns that those venture capitalists would want to see. And sort of more importantly, or a guiding point for us is that if we had gone through a venture capitalist route, we would be likely to be pushed kind of towards a market that was bigger. So we want to lock the purpose of the company to our original intent, rather than letting kind of our vision drift into markets that are perhaps bigger, but we think are less valuable or leave less of a positive impact on communities. So to ensure that we don't have mission drift, we've set up a governance structure for the company that is called a steward ownership structure. So we have distributed shares to a external company who's has a veto power to legally veto sort of more strategic or future decisions we might take that might push us away from our purpose and our mission of the company. That's one of the key things that our steward does. But our steward also locks us into two other legal requirements. The second legal requirement is that ownership of the company is to stay inside the company. We think that that is also very much linked to making sure we are committed to our purpose. And the third is that in addition to making the world better, we will not violate human rights with our work, which should be self-explanatory, but in technology, we thought we should add that as well. And so that middle point about keeping ownership inside the company means that any shares that we were to sell to investors, we need to figure out what is our strategy to incentivize them, give them a return on their investment. And in our case, we know that pathway is not an exit of the company. We're not looking to sell the company. We would need to buy back the shares. So that's a little bit about us and our governance structure and why VC funding wasn't a fit for us. I can hand it back to Esme, or.
Thank you. Yeah, I mean, if people have even questions about that, do put them in the chat. 'Cause I know there's a lot of different pieces there to that story, but I think things to highlight are, you know, that's yes, you're a tech business, and yes, you could probably have gone down that venture route, but you wanted to make sure that you served, as you said, a smaller market that you thought would create the impacts that you're looking for, that motivates you. And I've seen a lot of businesses that have not made that decision and have ended up going down a different way, serving a customer or solving a problem that they are not motivated to, because investors have are much more interested in solving a big market rather than the ones that perhaps we need to be focusing on. So thank you for highlighting that for everybody. Perhaps you want to share a bit more about your funding journey to now, and how you've managed to get to where you are.
Yeah, sure. So we have had, I would say, 3 chapters to our funding journey so far, and we are about to start our 4th chapter. We started, as I said, with sort of bootstrapped skunkworks, and that funding was to test some really early ideas. Didn't even get us to a prototype, but got us to sort of the idea for where we wanted to take the business. Our next step was we were able to raise some investment from angel investors who were interested in our vision and our mission, and actually sort of wanted to see how this experiment of working in tech but following a different governance model might work. So the angel investors who we found were seasoned tech investors who found this governance model interesting. And we asked for funding to put together our first MVP. So that was our first real fundraising step. And with that, we grew our team and were able to release our first product, which is really an open source product that, in parallel to developing it, we were working as consultants. So using briefs from clients to help inform how we built our technology. When we got our technology to a space that we thought was actually useful and usable, we then released that as open source. So that was our first funding and what we did with our investment from our angel funders. Our second chapter was building off our open source core MVP and building a commercial product. And that funding we've done through a grant with CivTech Scotland. And one thing that we really appreciate about that is an accelerator grant. So one thing that we've really appreciated about that funding opportunity is not just the investment that we've received from CivTech Scotland, but really the opportunity to co-create and work with our end user group to collect feedback. And in our case, that end user group is local authorities and planners in local authorities. Where we are now is we're coming to the end of our engagement with CivTech, with our local authority partners who've been using to pilot and test our product as we get it ready for commercial launch. And we're now looking at and getting ready for a growth stage. So building our customer base and everything that goes with having a commercial product out in the market. And we will have new funding needs. One thing that I will say is, well, and I'll say that we are looking for additional grants, as well as revenue from early adopter programs with our commercial product. One thing that we have been doing alongside the development of our technology product is consulting work. And I would say it's useful because it does provide another revenue stream. But if you are trying to build a product, it is also, there's an opportunity cost to it. And one thing when talking to VCs, just to sound out kind of our product idea and our direction, is whenever I mentioned consulting, they all sort of took a bit of a step back, and I, having gone through it now, very much understand why consulting is not a zero risk revenue strategy when you are trying to build a product.
Yeah. Thank you for sharing. I think the how you break it down into different steps of what you needed at the time and then what that looked like in terms of funding, hopefully is really helpful for people. And we can dig into each of those elements a bit more. If people have questions around, all of this amazing grant funding that you have got, how you've used it, or the conversations you have around angels that are experimenting with something new. If anybody has been around for a while and you've heard me talk about Library of Things, they also have a similar model and have also galvanized angels that are interested in experimenting as well. And I think what's important there is to realize the profile of the investor and why they'd be motivated. And in your case, it's experimenting and probably a bit of impact over maybe huge financial returns, but everybody's different. All right, I'm going to move on to the next speaker, but keep your questions coming. Ayla. So she is one of the co-founders of a VR company. So again, a tech business, and doing incredible things. And they have got quite a different funding journey, but an equally important purpose and impact behind what they are doing. They have used grant funding, they've used angel funding and some more institutional funding, because they both have big impacts and also the potential to be provide significant financial returns to their investors. So it's a different story. I don't know if Ayla, you want to speak a little bit about your journey so far and what you do and who you have and what kind of funding you've got.
Thanks, Esme. Sorry for my camera being off, everyone. I'm horizontal because I'm down with COVID at the moment. So if you'll forgive me for that. I'm Ella from Headset Immersive. We build immersive training tools that help people prepare for extreme situations. My co-founder, Kate, and I are both former recovering journalists. And we started very much with Headset being a side hustle, if you like. We were still working as frontline journalists in newsrooms when we built our first prototype back in, we started, I think, in 2018 with some grant funding that helped us test our early ideas. We didn't choose raising funding from angels and impact VCs. It sort of chose us, because at the time, we thought it was the only way. And listening to Claire's story about her stewardship model and all of those things, probably it would have been a really good idea for us to consider that in the beginning. But we didn't know. We did Esme's or the Considered Capital Alternative Funding School, probably about 12 or 18 months too late. So we existed on grant funding basically until our first product was released in 2021. We then took an Innovate loan, which we're still paying off. We then did a pre-seed round with angel investors and one impact VC, Bethnal Green Ventures, who some of you might have known or might know. And that pre-seed over the last 18 months has allowed us to kind of be deliberately unscalable, to do the things that were very human capital intensive. The kind of VR training that we do is, because it's in this very high risk realm, needed quite a lot of handholding to go alongside it. And we're working in with industries, journalists, media, humanitarians, frontline aid workers, etc., who really hadn't had any experience of receiving or deploying VR training at all. So we really had to build our own path to market, and I would liken that to hacking our own way through the jungle. We now are at a stage where in our beachhead market, at least, we have everybody on subscriptions. So they are now servicing themselves and running the training themselves. And so we are in the midst of putting together a raise for a growth stage where we move to other industries. So I would say our journey is sort of, to encapsulate it, it's about serving the markets that we care deeply about, and now also serving the bigger ones. Like I said, we didn't choose this path. It sort of chose us because we were in the BGV Accelerator in 2020. One thing that BGV has you do early, because they are an impact investor, they have you ingrain impact and purpose in your articles of association. And so that has helped us to be able to sort of steer the course. And I would say communicate to angel investors that this is why we're doing what we're doing. Once you take that first VC check, even if it is from an impact investor, it can feel like you're on a hamster wheel towards an exit. And we weren't sure what we wanted when we took those first checks. And we've since decided that we do want to exit. But my advice would be to be really clear from the outset, if you're taking angel and VC funding, to just be really clear what your end game is. Are you looking for an exit? Are you looking for a big VC to come in and raise a Series A or Series B round? Otherwise, in those conversations, you're going to get push-pulled in all kinds of directions. I really grimaced when you said, Claire, that you didn't have the market that VCs wanted to see, and I'm reminded of many of the early conversations that I had with VCs. We also didn't have the market or the kinds of revenue projections that VCs wanted to see. So one thing that is really important, I think, and this is all underlined when you do the alternative funding school, you might not need VC. It's, they have incredibly good marketing and incredibly good ways of making you think this is the only path. But actually, you can do a lot within your own networks.
Some wonderful, wonderful takeaways there. I think your journey is such an interesting one for people to hear, because you've gone, on a different but equally sort of wiggly path in deciding where you want to be, and there's no right or wrong answer, right? Some people want to pass on their businesses to their children, some people want legacy in another way, some people are looking to exit, and it's all equally okay and legitimate to do what you like. But as you say, really important to understand what that is as early as you can before you invite people in who have what you want. And also that element about purpose and mission. I think people have very different ideas around being purposeful and being impactful, but there's a scale here of your purpose and impact and how you embed it into your business. And you did a brilliant job of making sure that it was ingrained in your articles of association, which lots of businesses don't do. And also I know from our personal conversations, you were very careful about the angels that you invited into your business. You are impactful, you do have purpose, and that you don't want to sacrifice that. Can you speak a bit more about your journey in terms of building those relationships with your angels and having those conversations that balances sort of purpose and the commercial side?
Yeah, I think your best angel investors are going to be people who already know you and trust you. And if you don't know anyone who is an angel investor, then you need to build a relationship with them and keep talking to them about what you're doing, because angel investors are investing more in you as a founder than anything else. They're not really, you're too early for any kind of metrics that VCs would want to see. And so you need to have these conversations really early. Our cap table is a mixture of people of angels from our beachhead markets who just really care deeply about seeing our product in the world. And then also some other people who are in analogous industries that we want to jump to in future. So I would also say that, in addition to giving them lots of information about what you're doing, and often even the failures, because this helps to build trust and it helps them to see your growth. We communicate monthly with our investors, and we were doing that before they were on the cap table as well, like just saying, short emails saying, these are our highlights for the month. This is what we're doing. In addition to that, I would also say it's really important that the angels can actually add some value to your company as well. And so they should have some sort of particular skill set. We have, a lawyer on our cap table who we go to for, first pass legal advice before we go to our lawyers for the really chunky stuff. Or we have, somebody who is in an analogous market that when we're doing research, we can say, hey, tell us what our competitors are doing in your space. People who can actually add value are going to be your best bet. For anyone who's thinking of doing angel funding, I'd really recommend you listen to Kieran Hill's 20 Angel podcast, particularly the episodes with Carmen Alfonso Rico and Sarah Drinkwater. They're two of my favorite angel investors, who I would really follow what they're doing and hear their thoughts and advice and really use it in the way we interact with our angel network. So that's what I would say about angels. Framing impact, I really like being just very honest. Like, our angels were all on board with the fact that we were doing something that was akin to, the consulting that Claire was talking about, that was really allowing us to build products that really spoke to the end user, spoke to their needs, because we learned so much by doing that. And if we hadn't done that, we wouldn't be in a position to be at a growth stage now. And so they, taking them on that journey with us, we're doing this. Yes, it's human capital intensive right now, but here's where we're headed, was really, really important. I just wanted to also quickly address, Damien sort of said this is one of the first times I've heard about in the chat, different outcomes than exit for investor return. Yeah, I mean, there are also different exits, right? Like exit could mean another investor coming and clearing out your cap table, or exit could mean you're selling the business, or exit could mean many different things. So yeah, there are alternative ways that you can deliver financial return to your investors. In Claire's case with her model, it sounds like buying shares back is the way she's delivering financial return to her investors. We hadn't investigated all of those different outcomes beforehand, so I would really suggest anyone who's at an early stage to educate yourself on what the potential options are, and really look into what's best for you and what suits your timeline for that as well. Because if you want to hang on to the business for your kids, then that's really different to if you want to, you know, by whatever time and whatever stage, step back. And, you know, Kate and I have already said, you know, a long time ago, by the time, you know, we've got 100 people in the company, we don't want to be the person running that company. We want to be, you know, in a particular position doing our, you know, what our superpowers are, but we don't necessarily want to be the CEO of that company. If you do want to stay as the CEO, then you need a different strategy again. So really knowing yourself, your own skills, where you're headed, again, is an important thing in that exit piece.
Yes, I feel like I could listen to you all day, Ella. Lots of wise words there, I think particularly around being careful around who you invite into your business, but also the realities of raising angels, like any kind of angel funding, using any kind of story, or including impact or not, or a different exit story. A lot of people come to me being like, I need connections to angels. I've got 5 months. And they haven't built any relationships with anybody. And we're not saying that you need a huge network to start with. It is possible to build these relationships via cold outreach, but it's not just sending people lots of pitch decks. It's about building those deeper, meaningful relationships, because you want to know that they're on board for the right reasons as well. And as Ella said, you know, being honest with these conversations of being like, this is going to be challenging for the next 2 years because we're focusing on something that maybe a few angels might find a little terrifying, but actually we've got a game plan here, and it's going to make us more resilient in the long run. So thank you for sharing. All right, last but certainly not least, we've got Ella here. So Ella's sitting in a different boat. It's not a tech business. It is a top-up truck, so they are trying to help people with zero waste groceries. It's a really interesting business, and they've gone through a really, you know, interesting way to be able to fund it, taking money from different directions. Do you want to talk a little bit about what you do, Ella, and what are the sort of principles you've been following in your own fundraising story?
Yeah, awesome. Yes, thanks so much for inviting me today, Esme. Yeah, so as you said, it's Top Up Truck is a mobile excuse me, a mobile refill shop. So we help people cut down on plastic packaging. We've got currently just one milk float, and we're very much still sort of working on the MVP. I set it up 3 years ago in lockdown, kind of in response to my own challenge, which was I suppose, as somebody who's interested in sustainability and in refill, I wasn't finding the time to actually get to the refill shop. So I thought, well, what if the refill shop came to me? Yeah, I guess, so I set it up in kind of in furlough, when I was on furlough leave in 2020. And so it was very sort of quick to get to market, and I had kind of no expectations and no business plan. It was very much originally set up with my own savings. And yeah, I just thought, well, let's just see what happens, really. It makes sense for me. It makes sense for a few other people. So hopefully it can have some traction. So yeah, and people kind of took to it right away, and that sort of spurred me on to keep going. But then when we came out of lockdown, it was challenging, because we had started in conditions that were really favourable to this type of home delivery model. So yeah, we kind of had to start getting sort of different types of funding in order to carry on, like adapting it and making it something that can work in the new normal, or kind of yeah, sort of under current market conditions. By that point, we'd been featured in all sorts of amazing press, and we'd seen that there was a lot of desire to make this model work. So yeah, we're now we've got a team of sort of 7 part-time staff, and we are currently undergoing a 15-month R&D project that is backed by Innovate UK. So we're working with a bunch of academics and consultants to kind of yeah, just sort of build a scalable model and really like hone that MVP. So yeah, we've kind of so far sort of gone from something that's quite kind of bootstrapped and ramshackle, as it were, to something that's almost resembling a place of strength, which is really nice. But in terms of and in terms of the funding that we've had to date, we've raised just over 300,000, and that's been a combination of crowdfunding, small grants. We've also had angel investment, startup loan, and we've also obviously we had this larger grant from Innovate UK which is like R&D funding. But in order to, because that's paid in arrears, we had to get some private loan funding from two amazing female impact investors, one of whom I met through Esme. So it's it's kind of been a sort of a number of different funding instruments there in our journey. And in terms of sort of what's guided the kind of decision making around that, I guess where possible we've sought non-dilutive funding, which has been kind of most appropriate given that we're still sort of in that R&D phase, and we're developing something that can help us sort of reach net zero and build a circular economy. And so the funding is very much out there for that. I mean, it's really interesting to hear more about like alternate governance structures, and something that I'm still in the process of I guess learning more about and scoping out. But for the time being, we've sort of stuck with a limited company structure. So we're limited by shares. And we've got our mission, our environmental mission is kind of written into our articles, and we've got B Corp articles, and we've stuck with that so that I guess rather than kind of getting too, I suppose, lost in governance, as it were, early on, whilst we're still at this point, we're not quite at that sort of place of strength, and we're still sort of honing the model. Our main focus is about eliminating plastic and removing barriers to refill, and so we've kind of kept it with this sort of, I suppose, more flexible and like vanilla business model to sort of keep our options open and really keep focused on that goal. But once we're sort of past this point, we will be looking at just kind of revisiting that continually, and I guess that kind of stems from my own values in terms of sort of my attitudes towards capitalism, and my belief that we kind of need to build systems from the ground up that kind of serve people and planet in every sense. So I've kind of I'm interested in it sort of personally and politically, but for now we've sort of stuck with this more sort of straightforward path. So I'll hand back to Esme in case there's anything else you want to probe me on.
Wonderful. No, I mean, I think, first of all, I think you're being very tough on yourself. You've raised £300,000, which is really, really not easy, particularly in this climate where people have become obsessed by tech and tech solutions. It's incredibly difficult, and I think it's also worth pointing out that you are a solo founder, which comes with its own challenges in being able to build a business and also raise funding on your own. Lots of really helpful takeaways there, and how you've sort of guided and moved your funding journey as required, particularly focusing on that non-dilutive funding, all that good stuff. And for anyone who's not sure what that means, somebody very helpfully has provided a definition in the chat, but it's really any type of funding where you don't need to sell equity in your business. So it's the best kind of funding to explore early on when you're still figuring out some of these questions. But I think what resonates in what you're saying, Ella, is also that you don't need to have everything fixed a governance structure, something like steward ownership, or thinking about your purpose and your mission can come later down the line. You don't need everything now, and as you say, not get bogged down in those details, as long as you are aware of what your purpose is and you've, you know, making sure that you're not drifting from it is absolutely okay. And I think people feel a bit guilty about not having everything together all at once. I do have one more question about winning grants, because I know there's lots of people here who are attempting to win grants, putting together these very difficult and tedious proposals, and are losing faith in the process. So I want to dig in a little bit into grants, and this is also a question for Claire and Ella as well, because I know everyone here has won some kind of grant funding. And then I'm going to open up the floor to any questions people have. You can raise your virtual hand or your actual hand, and we will come and invite you to ask a question. But Ella, yeah, do you want to talk about your grant experience? What was it like winning it, and any sort of learnings you have in that process?
Yeah, so it was in terms of the sort of big Innovate grant that we had, it was the second time I'd applied to the same competition, and the competition that I applied for was specifically around plastic reduction, called Smart Sustainable Plastic Packaging. And Innovate UK they have quite a lot of sort of more, I suppose, niche competitions, which are probably statistically a bit easier to get funding in. I think that, so the first time I worked with a bid writer, and that kind of, I guess I learned quite a lot from the process of working with a bid writer about what's really important in terms of, just, this sounds really obvious, but the most important thing when you're writing these applications is just to answer the questions. And I think so many people just kind of don't do that, or they drift off, or they just haven't really understood it. And I think they're looking for, what I've learned is, they're sort of looking for like how well it meets the scope of the competition, and I suppose, you know, how well it meets their overall objectives as well. So I think it's really, really important to kind of understand the needs or the mission of the grant maker that you're applying for, and how your sort of product or service or idea kind of fits in with that overall picture, as well as just the kind of challenge itself. And it's been quite like a steep learning curve from sort of it's quite a lot of admin when you're working with Innovate, because it's also paid in arrears, so you have to report on every little detail of how you've spent the money before you're actually paid back the money. And we've one thing that really helped us win the grant funding was that we're partnered with UAL, so it's really good to kind of have an academic research partner, because obviously with these investments that they're making, like a lot of innovation, I suppose, doesn't necessarily lead to a commercially successful outcome. So I guess at least if there are research findings that can be shared, then that investment kind of isn't lost, if that makes sense. And also it just, by partnering up, it's, I guess we've got we've got some like research specialism, if you like. So it's been a super interesting journey, and we've got until the end of June, and it's just been a really exciting project.
Yeah, it's a lot of interesting stuff there. I think just the process of writing grants, you just improve, right? I think everyone that I speak to who wins grants, including myself, we just get better at it as we do it, and to not give up on that process, because it is a really invaluable pot of money. That's not, I don't like it when people call it free money, because it's not, as Ella has explained, it does come with strings attached. And don't forget to read the T's and C's when you get that grant funding, because you might end up with some cash flow problems if you're not aware that sometimes that money comes after you've spent it. But it is certainly worth it if you can power through with those applications. All right, I'm going to open up the floor to any questions, unless anyone else. I know Ella's helpfully put some thoughts around grants in the chat as well. I'm going to open up the floor to any more questions people have. We have about 15 minutes. I have about 1 million questions to ask. But if anyone has a question for anybody on any topic, here's your chance. You can just raise your virtual hand. Yes. Jeru?
Hi, I have a question for
Oh,
Ella.
you're a bit faint. It might just be me.
You guys hear me?
A little bit. You might just shout.
Oh.
Yes, there we go.
Enough? Okay, cool. I just had a follow-on question to Ella, who mentioned the academic partnerships. I've also got an Innovate UK grant. But I think it's a great idea to actually form a partnership with an academic institution. Can you talk a little bit more about that journey? How did that come along, and which institutions did you approach, and why? And yeah, just your experience with that.
Yeah, indeed. So I guess a bit unusually for this type of project, we're actually partnered with UAL, an arts university, not a science university, and essentially I cold approached a bunch of academics, and I was specifically looking at for behavior science specialists in circular economy. And because I guess when I was kind of thinking, what is it, what's really like holding us back from getting to where we need, it was just like we just don't understand why there's this big like intention action gap. The whole project is about identifying barriers and enablers to shopping from a mobile refill service. So yeah, I jumped on LinkedIn. And I kind of set about looking for specialists in circular economy, behavior science. And I ended up, meeting a couple of different people who have both come onto the project, and UAL is the partner institution. And then we've also got a subcontractor, and we've got a specialist in FMCG in circular economy, within behavior science, basically. And then UAL are sort of, I guess, facilitating all of the research and kind of putting in this kind of co-design methodology that frames the whole project and the way that we're approaching sort of research, then upgrades, then further research, and then conclusions, if you like.
Thank you.
Sorry, and one thing that I would add as well that's I found indispensable knowledge is that the KTN, which is the Knowledge Transfer Network, is basically the organisation that you speak to before I suppose doing these or went during doing these Innovate applications, and they actually help link up I suppose different types of subcontractors with main principal applicants and with academics, and they're really, really helpful. Yeah.
So UAL is a co-applicant to the grant, or is the grant an application so you can pay UAL?
I didn't quite catch that. Sorry, can you say that again?
So are you applying for the grant with UAL? Like, are they part of your application? Or is the application so that you can pay UAL?
Yeah, so good question. Yeah, no, it's I'm the lead applicant, except it is very much a partner application. So we also have subcontractors on our project team who we have a different relationship with, and we pay them, and then Innovate pay us, but they're on a separate claim structure, if you like.
Thank you.
I think there's a little spin-out group here in terms of grant funding. Lots of people being very helpful in the chat and conversations about the cons of a grant writer, what you should think about, sort of what they cost and how useful they could be. So we'll carry on those chats, that conversation in the chat. Do we have any other questions for our delightful speakers? Yes. Oh, the keenness. Mona, fire away.
Hi, thank you. So I had a bunch of questions, starting with the first one. So can you guys suggest any of these grants that you've acquired, if they also support so my startup is from India. So any of these UK or European grants that are applicable to Indian startups or Asian startups that you know?
I'm not sure we would be able to give that much of a specific response. I think you would have to go on to the UK government website, and they do have a list now of all the grants that are coming up in the future, and some of them might be applicable to an international audience, but I don't think we have specifics. But if anyone does, please put them in the chat.
All right. Thank you. And secondly, so we are looking to raise our pre-seed round, and we have had some revenue, and it's a female founded company. So since you people have also raised from angels and VC funds as well. I wanted to, and this is our first time, so we have been bootstrapped till now, and this is our first check that we're looking at. So, and we're looking to raise about 375K US dollars. And so how much, what should we expect going in, like the duration, because I keep hearing like different durations for different, amount of money, and yeah, basically like what should we like expect, first time going in?
I think that's a great question, like to prepare yourself in terms of how much time it might take, and also sort of the other things you need to be aware of. I don't know if Ella maybe is the best person, if you want to speak to that.
Yeah. So raising funding is really expensive in terms of your time. My co-founder and I are about, 1.5 of our time on fundraising when we're fundraising. So it's a 1.5 person's job. If you are looking to get funds, by a certain date, you probably, the first time you do it, you want 9 months of preparation. Because you will do your deck and then you'll change it a gazillion times as you get more feedback. If you're not already talking to angel investors now, I would start that, because you probably will then have a 6-month lead time before they've seen enough from you where they're confident enough to give you money. And I would start with your existing network. Like, who do you know around you that really believes what you're doing? Who is it's not, for us, it's not been the investors that put in 200, 300K. It's been the investors that put in the 5K, the 10K, the 25K, that have been the real value adds. And so collect those, everyone talks about you need to look for the lead investor, you need to look for the lead investor. One really important learning we've had is that just gather those small checks, just gather them as you go. You can take them on, sooner. You can, I don't know what instruments are available in India, but in the UK, you have either convertible loan notes or what are called ASAs, advanced subscription agreements. Now, these allow you to take a small amount of money from an investor without a valuation, to just say that when you do have your valuation, you will convert them to shares at that point. And so they have to have a long stop date, which will be 6 months if you need EIS or SEIS advanced assurance. But if you don't need that, those tax breaks from the government, then you can choose a long stop date of a year, for example. And that means if you don't raise funding before that year, it will convert at that point. So I would really encourage you to think about not doing it all in one chunk, because the admin for getting the raise across the line is huge. We had a situation last time where we had to get all our angel investors and our VCs to send money on the same day, and it was a nightmare. And it takes like weeks of preparation to get everyone ready. And then you're like, okay, everyone go, transfer the money, and then we issue the shares. It's like never again. So really ask a good lawyer to help you set up how you're going to take the money in. And then it helps in your conversations with angels as well, because you can say, look, if you can give us this small amount of money now, whatever it is, especially if they're going to add value to you, especially if they're going to help you with some sort of skill where they can say, yeah, you know, I'll invest this little bit in your company and let's chat every 2 months and see how I can help you with your marketing strategy or whatever. Go for those people initially, and then the bigger checks follow.
Okay. Thank you so much.
Thank you. Yeah, lots of very good advice. I think it's also crucial to note that it costs money to raise money from.
Yeah. It takes a lot of time. It's yeah. Well, the deck, everything that she said, that the deck takes time, and you keep editing it and going out into the network and talking to people. So yeah, thank you.
Absolutely, but do not give up. And some helpful people in the chat here are suggesting other places to go to that could be useful for you.
Yeah, thank you.
Right, so we have one more question about grants from Saskia, and then I'm going to give you all back the rest of your day. So we've got, with Innovate UK grants, how constrained were you about the scope of your project for the grant? Was it a very distinct project, separate from your overall startup, built on the same theme? Do we have anyone that wants to address that question?
We took Innovate UK grant funding as well. We've actually had 2 Innovate UK grant funds, and we'll echo Ella's point about, you know, remember that they pay you in arrears, and that there's a certain amount of admin once you've actually won the grant. One of the grants that we won was very much linked to product building, and was helpful because we were able to defer some of our revenue that would have otherwise need to come from a consulting source. That was quite helpful. And specifically, that was to get our open source project over the line. And Innovate UK, that was for one of their their open calls, their fast start calls. The other funding that we received from Innovate UK was actually in response to a challenge that they put out, which was a slightly unusual grant category for Innovate UK. But I would say that example was something that we were interested in stretching and having a way to test how we might stretch our technology and try to explore sort of a new market, but also the R&D behind what would it mean to get us there. So in both cases, the scope was very well defined, and you have to demonstrate how you've met certain outcomes or deliverables as part of your grant funding. And one of them was very much aligned with our product development, and the other one was more of an R&D, I wouldn't say divergence, but sort of outside of our core critical path.
I hope that answered your question, Saskia. I think it's important to realize that grants can be used in multiple different ways for multiple different use cases. And it's very telling here that every single one of our panelists has one grant funding, how useful it is. And I think also telling that every one of our panelists has explored different routes, right? They haven't just got one form of funding and that's enough. Figured out which type of funding works for each stage, and perhaps sometimes intentionally, sometimes unintentionally, but they figured part of it out, and they have managed to build their incredible businesses. So that is it for today. Thank you everyone who's been in the chats. I think it just shows you the value of peer-to-peer support, right? And these networks, because so many people are offering insights, offering connections, offering experiences, particularly around grants, and how valuable that is. So thank you all for joining today. If you want more of our help, as I said, we have our fundraising masterclass next Wednesday, and Sam was very helpfully put the link in the chat, and we have our wonderful alternative funding school. Thank you all for joining. We will run more of these events with more brilliant panelists, and thank you for today's panelists for giving up your time for such a crucial topic. Thank you, everybody. Bye.